Hey, welcome back guys to another episode. In this one, I'm going to keep it really quick so you don't have to go through every single piece coming up on YouTube about Bitcoin and what is happening in this space. First of all, look at this video. We've got Raoul Pal, who is very famous in the crypto space, talking about his allocations and why he's done those allocations.
How does your portfolio look now from a breakdown? How much is in Bitcoin, how much is in ETH, and how much is in DGen?
Yeah, first you need to understand why was I doing that, right? And in traditional markets, once an established trend takes place, you move out the risk curve. So for Bitcoin being like government bonds, and then you go to Ethereum, which is like corporate bonds, and then you go to junk bonds, which is all of the other stuff, right? And then private sector lending. That's a risk curve. So I'm just moving out the risk curve because the trend's established. And I know that in a bull market, ETH will outperform Bitcoin and alts will outperform ETH. Now, the ETH Bitcoin bet is easy because we know ETH, it's a giant, it's got massive network adoption, at least twice the rate of the network adoption of Bitcoin. And we've seen the whole rise of DeFi, NFTs, everything on top of ETH. So it's a great bet. So I'm 55% ETH, 25% Bitcoin, and 20% alts. So I got to that alt thing. Why did I ask that question? I wasn't asking, I didn't care who shilled me.
Right, so Raoul Pal believes that we are in a bull market, and what he's saying is that basically Bitcoin has become something like bonds, something that is relatively low risk in the eyes of these investors. And what they tend to do is when Bitcoin starts going up and they know that it's going to continue going up for around half a year, they take their money out of Bitcoin, which they've kept in for a 3-year bear market, and then they put it in higher risk assets like altcoins. And those altcoins, if you want to find out which altcoins he's invested in and when, you can go to Crypto Banter's channel, Crypto Banter's website, and have a look at what he's put his money in and when did he state that he's put his money into those things. So moving on from that, if we go to what Dalio said in Consensus 2021, which was hosted by CoinDesk, we can have a look at how bullish he is in allocating his capital into Bitcoin compared to other allocation options like bonds he talks about. Let's have a look at what he had to say.
Bitcoin's greatest risk is its success. Because as it becomes more, right now, it's not such a big deal. And, fighting it is more of a big deal. And that's it, because it's not that big a deal. As it becomes a bigger deal and more of a threat, let's say people want to sell their bonds and they want to buy Bitcoin. And they want to do that in a bigger way, like buying gold or something in a bigger way. And then there's more transaction. They lose control over that. And that's an existential risk. So yes, that's connected. The more we create savings in it, the more you might say, I'd rather have Bitcoin than the bond. Personally, I'd rather have Bitcoin than a bond. And then the more that happens, then it goes into Bitcoin and it doesn't go into credit, and then they lose control of it. So yeah, that's a risk.
So that's what Dalio had to say about how he would rather prefer putting his money into Bitcoin rather than bonds, and how he thinks that's probably what young people right now are thinking. When was the last time you bought a bond or heard your friend talking about buying a bond, right? If we go and have a look at Google around how big is the global bond market, you can see how big it actually is. It's $128 trillion apparently. And all of that money, if you compare that to the market cap of Bitcoin, it's market cap of Bitcoin and market cap of crypto is basically nothing. All of crypto is around 1.5 trillion. So compare that with 128. Well, that's a 100x from where the crypto market is right now. And if you think about the bond market, who wants to put their money in something that is going to give them 1% return, or in the EU, a negative return? So if we move on from there to what Michael Saylor had to say in Consensus, and obviously he's a gigabull. All he does is talk bullish about Bitcoin. We know that. We just keep that in mind, that basically most of his capital allocation is in Bitcoin.
What surprised me is that we've had a nonstop avalanche of good news. David Rubenstein, who's Jerome Powell's famous boss, endorses crypto. Larry Summers, the Secretary of the Treasury, endorses crypto. Goldman Sachs declares, they endorse Bitcoin, right? They're saying that this is a new asset class. Ray Dalio says he'd rather own Bitcoin than bonds, right? Coinbase comes public. An avalanche of really good news. And then I see the volatility in the market all based upon FUD. And the FUD is, at first it was the Chinese are mining too much Bitcoin. And then the FUD was sell Bitcoin. And the second FUD was the Chinese are going to stop mining Bitcoin, sell Bitcoin. And then the FUD was, well, you can't buy Bitcoin in China, sell Bitcoin. And then the FUD was, oh, the Chinese reiterated you can't buy Bitcoin in China, sell Bitcoin. And then the FUD was, oh, IRS says you got to pay your taxes, sell Bitcoin. So, and that's the news cycle, right? So I feel like everything's working out great. I mean, if you'd asked me in August, do you expect to get the legitimization of Bitcoin like this? I wouldn't have in my wildest dreams expected so much good news to come. So I think it's going awesome. Just the market's volatile.
So that's a summary of what Michael Saylor has to say about what's going on right now. Everything is awesome. He's a gigaball, obviously, but what he does have, which nobody else has, is the contact with people like Elon Musk and the mining community. He's obviously been responsible for the formation of the Bitcoin Mining Council, which we're going to start hearing more about. Now, something else that Raoul Pal also mentioned is that in the EU, what investors have to look out for is ESG. It is the law. Investors, big investors, cannot buy things that are actually destroying the environment in the EU's opinion. And all of this just started all of these rumors about Bitcoin destroying the environment and being larger than Sweden and all of these things. Around 40% of the electricity consumed by Bitcoin as a worst case scenario, as estimated by Cambridge, is from renewables, which, you know, is a greater consumption of renewables than most of the world's, even most of the Western world's countries consume. Most of the world actually still relies on non-renewables, whereas Bitcoin uses up quite a lot of renewable sources. So it gives an incentive. If you check out what was happening during this bull market phase of about 2 to 3 months that we just experienced, a lot of Bitcoin was moving out of exchanges. And what happened recently was Bitcoin started moving into exchanges. So what a lot of analysts, what a lot of fundamentalists believe is that when Bitcoin is moved from personal wallets to exchange wallets, usually they are going in that direction to be sold. Obviously, hindsight is 2020, so it's easy to say that when we're looking at the chart from where we are now. But relatively, when you look at this chart of how much money moved into exchanges, it wasn't a lot compared to what was happening last year. So yeah, that's that. There's a tweet yesterday by Glassnode saying that it's now gone into the negative, meaning more Bitcoin is being taken off of exchanges than is being put on. That can be taken as a bullish sign. It can reverse any moment. We don't know that. But let's continue with what we were doing. This is something that Plan B, the person behind the stock to flow model, just tweeted today. And he is saying that nobody who bought Bitcoin and hodled for over 4 years, which is around 200 weeks, ever lost money. Ever. And that is true if you look at this graph. Basically, if you bought Bitcoin at any point during this 10, 11 year phase and you basically just held it for 200 weeks, then you have always made money. You've always been in the positive. We're not in this market to just crack a positive. That doesn't mean so much, but it brings about a bit more confidence. Now, if you look at the cycle and you just compare it to the stock to flow model, it's not really done much. It's just gone down a little step here. So basically, when you zoom out, it looks like nothing has actually happened. Now, there is more technically positive bullish news coming out around the end of this year with Taproot. Taproot activation is gaining momentum as miners are signaling their acceptance of Taproot. And we already knew that no large miner or mining pool was against the activation of Taproot. So it is looking like it's very likely that Taproot will be activated around the end of this year, perhaps not in this phase. Each signaling period is of 2016 blocks. So once we finish this and we continue to have over 90% of acceptance, Taproot will be accepted and Taproot will go live around the end of this year. If you remember what happened around SegWit, it was quite a massively piece of bullish news, although post SegWit, it was a sell event. Now, in more macro news, if you move on to this article from the Financial Times, Apple is now looking at recruiting people to work in their alternative payments team, but they're specifically looking for people who have experience in cryptocurrencies. So it is looking very, very possible now that at some point, Apple is going to start letting their users, letting the people that have Apple cards and Apple Pay, paying using cryptocurrencies that they might already hold or they might buy using the Apple platform. Apple will probably have a lot of roadblocks that they have to overcome with financial reporting, but it's good to see that they're moving in the right direction for the time being. Now, another piece of article that is not on the news so much is that Biden is expected to unveil a $6 trillion spending plan today in his first budget. If he actually does that, you can imagine the flood of money, the flood of liquidity that will go into the markets where do you think most of this money that will be given out to retail investors, to general consumers, is going to end up? So it is looking like the dollar is going to become even cheaper than it currently is. Basically, that means inflation, and that means that every asset that is anti-inflation, like Bitcoin, even possibly gold, will go up. Now, if you move on to the final piece of news that I want to talk about today, we've got PayPal is going to let customers withdraw the cryptocurrencies that they were letting their consumers buy for the last few months. So if you have been following the news, PayPal has been letting their customers buy cryptocurrencies using the money that they have on their PayPal for quite a while. But they haven't been letting those people withdraw that cryptocurrency into their own personal wallet. So you've had to always hold it onto the PayPal platform. And that is very bullish, because if you remember, when cryptocurrencies are taken off of exchanges, the price is allowed to go up because there's less selling pressure. So if you look at how Bitcoin has corrected over the last couple of weeks, and you look at all of what I just went through, you start to get a less bearish picture, and you start to become a more long-term bull, as I personally am. Now, none of this was financial advice, but I hope you found it very useful and valuable. If so, do hit the like button on this video and subscribe for similar updates like this in the future. Check out my other videos as well and share this with a friend. I'll see you next time. Bye.